Okay, I'm here with Jerry Williams, who's been part of the Rich Dad Advisory Group for a while now. I've been buying from Jerry for years. So he's Jerry Williams, American Precious Metals, is here in Phoenix, Arizona. And you can reach him at APMAZ, American Precious Metals, Arizona.com. Okay? So the reason I wanted Jerry to come in is for a number of years I've been saying to people, you should buy silver under 20. Buy silver under 20. And I said, it's a bargain under 20. Well, today, this is late March 2011, and silver's at 35 now. And on top of that, you can't even get the stuff if you order it. And so I just want to bring Jerry up to date right now, because I also did a webcast the other day, and somebody says, well, now that you said buy under 20, so when's it going to be under 20 again? I said, you moron. And I have friends and family. I've been telling them for years, you're going to wish you'd buy it at 17. You're going to pray, because I've been picking up at about $3.90, $4, and it just keeps climbing up. It's the same as gold, because a number of years ago I bought from Jerry those gold
American Eagles.
Not American Eagles, the nickel, the buffalo.
Oh, well, yeah, but even before that, you were into the Eagles.
Yeah, I've been buying gold and all that from Jerry. But I remember when those Buffalo Golds came out, and they're 1 ounce pure, right?
Right.
It was $800. I think it was $100.
Yeah, those are the proofs. You bought the uncs too. The unc circulator were around $650, and the proofs were over $800.
Yeah.
I remember that when they came out in '06. Yeah.
And so I said, $800. Oh my God. Because I still remember gold at 300.
Right. That's when you start buying.
So in the year 2000, gold was at, let's say, $300. Today it's $1,450, $1,400.
Close. Yeah.
Give or take. The stock market has done zero. And they're still saying buy stocks. I mean, stocks are still underwater. They haven't gone up at all. They go up and down, but they don't go up. But anyway, I want to have Jerry talk about gold versus silver, but also the older I get, kind of the more pessimistic I get. And I have a bad feeling. I mean, since about November, I've had a very bad feeling. And the bad feeling is we're going down somewhere. We cannot stop this train that's moving right now. So with that was my points of view. I brought Jerry over. He's been in it for years. So would you mind giving us a little bit of background and how you got into gold and silver?
All right. In the summer of '71, I was a tourist in Europe, like a lot of other college kids that went for the whole summer with a backpack and a rail pass. And I had a American Express calculator. It gives you all the fixed exchange rates. We had fixed exchange rates with the European currencies at that time, and you could get 4 Deutschmarks for $1 and 5 Swiss francs and 5 French francs for $1 and so on. And the longer I was there, the less attractive that exchange rate got. And finally, when I left there in about August of '71, I came home and was complaining about being ripped off by all the banks in Europe. And then Nixon announced the first dollar devaluation since 1933. That was in August of '71, and the gold price got revalued from $35 an ounce up to $38.22. And that got me on a mission to find out what this was all about, because I had no economic background in high school or college. They don't teach courses about that. So I did some investigation on my own. I read a book by Harry Brown, the late Libertarian presidential candidate and a wonderful writer and economist. He wrote a book called How to Profit from the Coming Devaluation. I read that book, and the rest is history. It changed my entire life. I got into the business in 1973 after being an early investor when gold was around $60. And within 6 months, it went to 120, and I was hooked. Also, within 3 months, it went back down to 90. So I learned a lot about how not to use leverage, because it can kill you. But so I've been in the business since '73. In '82, I had to leave the business to make a living for my family, and I went to work for a major investment house as a stockbroker. And for the next 12 years, I was in the securities business. So I gained a lot of economic knowledge at that time. And just to tell a little bit of story, a joke on myself, when gold hit $400 for the first time in 20 years practically, and the Dow hit 4,000, I figured it was about time to make that transition back into the gold business. And of course, what happened was the Dow went from 4,000 to 14,000, and gold went from 400 straight down to 250, and nothing much happened for the 5 years. So it was a little tough getting started, and I was a little premature, but that bet has paid off in the long run. And just to mention something Robert said here about the stock market, when I left the gold business to become a stockbroker, the Dow was at 800 and gold was coming down from 800. So you literally had a 1-to-1 ratio of stocks to gold. In other words, it would take 1 share of the Dow would buy 1 ounce of gold. Since that time, that ratio ballooned to where the Dow went to 14,000 and gold went to 250. You can do the math. The ratio is about 47 to 1. And since then, which would have been 1999, the ratio is back now down to about 8 to 1. So it takes 8 shares of the Dow to buy 1 ounce of gold. A very gifted writer and economist I've been reading since 1974, Richard Russell, writes the Dow Theory Letters. And he has projected, he's been saying this for years, that that ratio is going to be 1 to 1 again, somewhere out there in the future. You can just see the lines converging. We don't know what that number is going to be. 5,000? 3,000? Who knows? It doesn't matter. The fact is that it appears to me at this time that stocks would not be a place to be for safety, and gold would be. So, having said that, we were talking about gold at $14.30 and silver at $36. That ratio is changing as well. In 1790, when the Constitution was written, Thomas Jefferson and others at that time went back through history and determined that the right ratio for gold to silver was 16 to 1. So they put that in the Constitution, and it stayed that way until 1933 when we had our first dollar devaluation. That ratio over time has fluctuated as high as 100 to 1, and the only time it got back close to that government imposed 16 to 1 was in 1980, when gold was 800 and silver was 48. But it wasn't there for very long, just a few days. Then it got back down to, it was way out of line, 70, 75 for a long time, and now we're back to, what, 47, I think it is. Is it going to be 1 to 1, or 16 to 1 again? I don't know, but I think 30 is a definite possibility. So again, you can do the math. I think silver's underpriced at 36. Robert says, told people to buy it under 20. I'm not sure you'll ever see it under 30. The momentum is there. I see it all day long. People coming in, everyone wants silver because of the low unit cost. It has been available. It's now suddenly drying up to where I can't order Silver Eagles anymore, not for the rest of this week from any of my suppliers. So they're just not available. Bags of silver have dried up, 100-ounce bars. It's really tough to find silver for investors right now, which only means one thing. The price is going to continue to go higher. The demand is not going to go away. It's not going to go away because people are beginning to get wise now. I just read something that just scared the daylights out of me, and I've been in this for a long time, on a website called shadowstats.com, just like it's spelled, just like it sounds. A brilliant economist by the name of John Williams. And I will just share just sort of a summary of what he said, because I've been reading gloom and doom articles since the 70s, and the world somehow never comes to an end. We always manage to survive and go on, whether it's Reagan and Volcker or whoever it is that comes along and saves the day. This time, John Williams, no relation to me, by the way, says that we're here. We don't have a year or two. That calamity we've been thinking about, where you need to get out and stock up on consumables and you need to get your money safely out of the banks and the markets and put it aside in gold and silver, protect those assets. That day is here right now. And when I read that from this person who I've read before, who's always said, well, in a year or so, we think we'll have this or that, and hyperinflation. Hyperinflation is starting. Go to the store, you can see it yourself. The only question is the timing of how bad it's going to get before actually everything just implodes. We're already seeing the monetization of debt on a major, unprecedented scale. We were just talking about this a minute ago, where in the last 30 days, all of March and February, all of the Treasury debt that has gone to auction has been monetized. I'll say that again. Monetized means we bought our own debt.
If I could explain that with a diagram here, that is significant because it goes to my book, Conspiracy of the Rich, and all the other books that have been written on it, is you have the U.S. Treasury, and then you have